Good morning and welcome to today's webcast, Capital Construction Audits, How to Manage Capital Program Construction Cost. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And I'm pleased to introduce today's presenters, Mark Sterenka, Partner, and Steve Bachetti, Senior Manager. Mark, I will turn it over to you to get us started.
Thanks, Emily, and good morning or afternoon to everyone, depending on your location and time zone. Really excited to be with you today, so thank you for your time. As Emily mentioned, I'm a partner with Moss Adams. I lead our business consulting services group. I've had the pleasure of working within and around the construction industry for over my 30-year career, so we're very excited about this webinar. And Steve, I'll turn it over to you to introduce yourself before we get going.
Good morning or good afternoon, everyone. My name is Steve Bachetti, and I'm a Senior Manager within our business consulting group focusing on construction advisory services. A little bit about myself. I'm a certified public accountant, certified internal auditor, and certified construction auditor. I've performed hundreds of construction audits, which have resulted in savings and control and performance improvements for a wide range of clients, such as state and local governments, tribes, universities, community colleges, etc.
Thanks, Steve. And just we've had a great turnout. We've had well over 500 people register for this webinar, which is fantastic. Just so you know, people are stretching from New York to Washington, so we've got the U.S. covered. Got people from a lot of different industries, just to name a handful: local government, not-for-profit, aerospace and defense, higher ed, tribal and gaming, utilities, oil and gas, manufacturing, healthcare, hospitality, transit and transportation. And what that really just reflects is, as we all kind of know, it's a strong economy. There's a lot of capital projects and construction going on, which is fantastic. And part of this is helping you all get the biggest bang for your buck in those projects. This particular webinar is part of a series that we've been putting on under kind of an internal audit framework or banner. And just want to sort of ground us in that a little bit. Internal audit, which we provide for a lot of clients has a pretty broad reach, in internal audits really geared towards reducing risks, strengthening controls and compliance, and enhancing performance. And construction, as contract audits and different types of performance audits in terms of functions within an organization, all help organizations to do what they do better, to better serve their constituents, their communities, their customers. And so we're kind of providing that under that banner. And as I mentioned, this is the second in the three-part series. The first part focused more on general operations, i.e. how we do a general risk assessment, what types of controls to look for, where are there opportunities for gaining efficiency and effectiveness in general operations for organizations. Construction happens to be one of those unique areas where really every single time we can find opportunities for cost savings or revenue recovery, whichever way you want to think of it. And so that's always a win. It's always a nice place to be. And so that will be our focus on today. And then later this year, we'll have our third part where we'll focus in on contracts and sort of the same type of approaches. How can you get contracts which span a lot of different areas of focus and service to better work for your organization. So with that, I'm going to turn it over to Steve to dive us into construction audits. And again, thanks so much for your participation. Over to you, Steve.
Thanks, Mark. In this presentation, as Mark discussed, we will be talking about how to manage capital program construction costs, and we will cover the following: common construction program exposures, best practices for addressing construction program exposures, approaches for assessing labor, equipment, and change orders, guidelines for capital program controls assessments and audits, expected savings from these types of reviews. And I just want to highlight that at the end of this presentation, there will be a Q&A session. So please send your comments, questions, and concerns, and we will address as many as we can during this window. If we run out of time, please reach out to us directly, or I'm more than happy to follow up with those of you that have asked questions and we didn't answer them to make sure that we're supporting you guys how we can. And just to highlight this, the last slide of this presentation has our contact information. So feel free to reach out to us at any time. We love talking shop about major capital projects with project owners. Okay, before we talk about Moss Adams construction audit practice specifically, a little bit of our firm background. Moss Adams is a large national professional services firm, and I find we offer our clients a significant benefit. We're large enough to have the resources these projects require, yet we're small enough to provide the personal, tailored, and timely services needed to achieve great and consistent results. Our construction audit practice does about 50 construction audits per year. As shown on this slide, our major service lines include contract reviews, cost and control audits, change order reviews, and performance audits. We also do policy and procedure work. Our typical projects and contracts range is $50 million plus to $5.5 billion, which we've done. However, if you have a bigger capital program, I don't think we'd have any issues supporting you. Our team consists of skilled professionals and construction auditors. Each team member is familiar with the different construction contracts and project delivery methodologies, along with the associated risk and needed controls for each of those. We've worked directly with owners, developers, general contractors, and construction managers on issues arising out of schedule delays, construction quality issues, change orders, excess charges, and project reporting. We understand capital program and construction projects, as well as local and state regulation compliance issues. Our team includes professionals who have outstanding credentials, capabilities, and knowledge of the construction industry, along with the skills and capabilities needed to deliver on these types of services. We find that clients that have chosen our advisory group have told us they benefited from the extensive industry experience of our engagement team, regional professionals, and a high level of senior team member attention. Drivers and influencers, or why is this a very in-demand and important area to focus on? Why are you here? Overall, facilities are aging, and there's an increase in usage or needed usages based off population growth and demographic changes. Also, we're finding that there's improving economic conditions. With more money readily available, organizations are able to put it to use on needed or wanted large capital projects. Highly involved stakeholders and statutory requirements. Capital programs are often the largest portion of an organization's budget. With program costs ranging from a few million to several $billion, stakeholders want to know where and how the money is being spent. High-profile, high-dollar projects such as infrastructure upgrades, new schools, and hospitals likely receive extra scrutiny from organizations, the media, and the public. Changing code requirements impacting facilities. Code requirements are always changing, and your facilities need to comply with them or face potential risk. And let's talk about cost. With the construction boom, if you're going out there to look for a contractor, I'm sure you're seeing this, contractors and laborers are in high demand, resulting in higher materials and labor costs. For owners, this can mean higher prices, less favorable contract terms, or the inability of procuring a qualified contractor or project management team. Construction program and project exposures and cost implications. And now our first polling question. Emily, do you want to do the polling question?
Yep. Our first polling question is, do you currently have a capital construction program? And your options are yes, no, or not applicable. I'll give everybody a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. If you're having trouble seeing the poll, I would recommend refreshing your browser. I'll give everyone a few more seconds.
A point of clarification, if you're planning a capital construction program, we won't ding them if they answer yes, correct?
That is correct.
Great.
All right, let's take a look at the results. Back to you.
Great. So as you can see, most of the attendees have a capital construction program, which is great news. You are in the right place. Now, the questions you should ask about your controls if you have a capital program or construction project or you're planning on doing this. A lot of different programs and projects are different. You have different staffing mixes, you got different policy procedures, you got different staffing resources, documentation readily available, you have different software systems and controls supporting your program. So I want you to think about your specific program and project. And the reason for these questions is asking yourself these types of questions will help you identify your program and project's risk exposures and areas for improvement. And these are some of the questions I will ask clients during a risk assessment or an audit, determine the best place to focus our attention on. So some of these may not apply, some of them may absolutely apply. So we'll just go through the list. I'll have some additional questions, and I want you to think about your project and program and see which ones apply. What controls are in place to ensure contracts include the most favorable pricing and controls? What are your policy and procedures around contract procurement? Are you procuring the best type of contract for the scope of work? For example, lump sum or GMP or job, a JOC contract? Is the documentation and reporting readily available to validate your policies and procedures were complied with? Did you utilize contract language, or did you have a third party review the contract to ensure that the contract terms are fair and reasonable? Moving on to the next question. What controls are in place to approve project design, construction budgets, and spending? This is a very loaded question, but let's go through this. What does your master plan or project look like? Does it include the requirements per your stakeholders, users, and potentially your users' parents for the K through 12 people that are attending? What was your criteria utilized in your needs facilities assessments? Are your capital program construction project budgets approved? We often go to clients and they have this great master plan, but they don't have the budgets to do it, and they're wondering why the construction hasn't started. Do you have the funds necessary to cover the estimated cost and then some? Are you allowed to utilize the funds that you are intending on using? This is specifically for the California clients with Prop 39 that they need to make sure that the design plans comply with the ballot language. Or for other people on this call, are there other stipulations on how to use the expenditures? Who's reviewing the budgets and spending? Are they qualified and utilizing best practices and key performance indicators to ensure issues are timely identified and resolved? Next question. What controls are in place to manage and monitor project cost, schedule, and scope performance? Who's reviewing the cost, schedule, scope, and performance? Again, are they qualified in using best practices? We often find, just an additional note, that we hear, oh, this is how we've always done it. However, that typically is not the best approach. By utilizing best practices on evaluating or managing your project cost, schedule, and scope performance is needed to ensure that you're not having the unintended issues that occur. What controls are in place to audit and validate contractor charges? Do you understand who signs and authorizes what and what their review entails? Sometimes we'll go to clients and they'll approve the invoice application from the contractor. It's a cost plus contract, but they're not seeing the cost detailed. This can be a huge risk. What controls are in place to authorize contracts, purchase orders, and payments? How do your contracts and scopes align with the master plan? And are your procurement policy procedures, if you have them, are they being complied with? What controls are in place to control change orders? Who initiated the change? Was it you guys? Was it the contractor? Do you understand the root cause of the change order? Are these really your changes? Are they fairly priced and adequately supported? What controls are in place to comply with government regulations? Do you have any? Are you complying with them? If you aren't sure, there could be an issue. And we find that these can be major issues where if you do have regulations that you need to comply with and you're not, these are the type of things that we find will show up in the media, which is not a good problem. What controls are in place to close out a project? What are your current procedures? Do you know if you have closed out and collected all information? Where's your warranty information? Are you complying with your warranty terms? What does that look like? So warranty on assets that you guys have purchased is a very critical item that I think a lot of people don't think about. But if you purchase these very expensive assets, you want to make sure you're complying with the warranty conditions so you're not having duplicate costs. It's not an easy one to explain. All right. Here's a list of common construction and program exposures. I'll let you take a moment and look through these and see which ones most likely impact your projects and program. Again, please jot down your questions, send it to us at the end of this presentation. We'll go through as many of the Q&As as possible. If we don't get to your question, either Mark or me will follow up with you and make sure that your answers your questions are answered. Okay, so I will go through a few just to add some additional notes. The first one, inaccurate program financial records and reports. I often see instances where the facilities development group know the real project schedule, and this may significantly differ than what stakeholders and end users are expecting. This discrepancy can cause major operational disruptions and financial issues. Number two, priorities and/or project funding is not aligned with the project plan. Another big issue, we often find people will get large bonds and they don't have an implementation plan. Certain projects go over budget, so they can't get to everything. So what is your implementation plan? How do you prioritize projects, and how do you communicate this prioritization process with your stakeholders and end users? Three, cost escalation. How does your contract handle cost escalation for multi-year jobs? Do the terms protect you from excess cost? Now we'll switch over to the other column just to get some coverage. Construction quality issues. Do you have a material specifications guide? Does your program buy the Honda Civic type materials, or are they more the BMW? Who are your end users? Which one's a better fit? And finally, project staffing. Do you have the right mix of qualifications and experience to manage your program? Are you overstaffed? How are you managing the staff cost to prevent cost overruns or inadequate control procedures? Other project lists that are not on this, which are major issues as well, is sales and use tax compliance, state credits and incentives opportunities that people aren't taking advantage of, inefficient workflows resulting in excess operational costs. For example, have you considered lean? Can you take advantage of accelerated depreciation? If you're not sure, you might be leaving money on the table. So there's a lot of program exposures that you need to go through to make sure that you have good controls and processes and are achieving maximum savings. Construction project risk factors. Here's a list of some of the project risk factors. I'll let you spend a minute on these and then I'll go through them. All right, we'll go through these one by one. The size of a project and contract type can change the risk profile. That is, a 100K job should carry a different risk than a $100 million project. If your program is utilizing lump sum contracts, procurement controls and change management are common high-risk areas. If your program has GMP cost-plus contracts, both procurement, change management, and expenditure management controls are common high-risk areas. Owner construction experience. Expertise in construction, and we find this all the time, that the expertise in the construction programs and related controls aren't typically the core skill sets for educational or governmental organizations and the individual departments within them. The key is to select qualified personnel and or auditors with the construction audit proficiency to identify program risks and put together a tailored audit program to mitigate these areas of risks. Project staffing. Does your project or program have too much or too little? Is it anticipating the construction activity now and in the future? So if you're ramping up, do you have the right people and enough people? If you're ramping down, are you making sure that you don't have excessive charges? This differs, so that you got the project and the program, so making sure that you guys staff it correctly is critical to ensure that you can deliver on a successful project and program. Exercise of audit rights. If your contract does not have this, you need to work with your contracting and or legal department to get this included in your contract. This is a big area where you can get cost information to ensure that you're not getting overcharged. Funding source requirements, and compliance requirements. Where's the money coming from? Are you allowed to use it for your construction program or project? For example, as I mentioned earlier, in California Prop 39 requirements only allow you to use funds for projects specifically listed in the ballot language. If you spend your money on non-compliant expenditures, you could be putting your organization at risk. Schedule impact. Understanding your scheduling needs and ensuring contracts are procured and managed accordingly is critical to prevent operational issues and cost overruns. Contracting competition. Given the construction boom, as mentioned earlier, obtaining qualified contractors at a reasonable price is getting more difficult. Some risks here include ensuring contractors have the capacity to achieve your program's needs, and ensuring that you are getting qualified project managers assigned to your project. Best practices for addressing construction program and project exposures. I'm going to pause for a second. There's a lot of information on this slide, so I'll give you a minute or so to go through the different stages of the workflow assessment. Great. I'm sure you guys are all experts now, but I'll summarize. In the workflow, there's different stages of a program and or project. The 5 core stages are planning, programming, design, construction, and completion and closeout. As you can see, there's different steps, and different steps are required within each phase, and prioritization can be critical to achieving your program's objectives in a timely and cost-efficient manner. Each stage and subgroup has its own set of risks and audit procedures to mitigate those risks. Again, every project differs, so some may relate directly to your program while others do not. These assessments can help stakeholders with information to improve performance and operations, reduce costs, facilitate decision-making, and contribute to public accountability. If you do not have the technical background in construction and capital programs, the following audit components may be at risk. Objectives. What are you trying to achieve? The most appropriate objective to address the various program aspects of your capital program may not be selected. So some of these may not apply, so spending your time on those objectives is not the best use of your time. Your capital program may be experiencing cost overruns, gaps in funding availability, or schedule delays. Audit objectives may need to be selected that review project processes, procedures for managing scope, prioritization of projects, quality, schedule, budget, or change control methodologies and reporting. So it's very specific to what your needs are. Criteria. What are you evaluating your current process against? The most appropriate criteria to evaluate the results, control, efficiency, and compliance may not be utilized. Setting appropriate criteria is a critical step and may include purposes or goals prescribed by law, regulations, or the audit entity's officials, policies, and procedures, and or technically developed standards or norms. We often hear that this is how we do it, like I said earlier, but this isn't the best criteria as the basis for evaluation. I find most programs can benefit from the GFOA, the Government Finance Officers Association, to help find criteria that help support their specific objectives. And methodology and scope. The methodology and scope selected may not result in sufficient appropriate evidence to support meaningful audit conclusions and facilitate productive conversations. Scope and methodology should be designed to obtain evidence and address your program's objectives and provide reasonable assurance the evidence is satisfactory and appropriate to support the audit conclusions. If you do not select good methodology and scope, there's a very good chance you will not have productive conversations. And I'll just re-highlight that with good objectives, best practice criteria, and appropriate methodology and scope, you can facilitate productive conversations to enhance performance, improve controls, and achieve savings. That's the best chance. Okay, this slide includes some project-specific risks and controls. Again, I'll be quiet as you review the chart. Please jot down your questions and concerns, and I'll try to address as many at the end of this presentation. Okay, I'll go through one just so you get an idea. A common risk that we come across often is labor overcharges, whether at the program or contract level. So how do you track time? How do you review time? Do you have a detailed timekeeping documentation for contracts? Are the rates compliant or at actual, depending on your contract type? Are they excessive? Do you have a staffing plan to ensure you're not under or overstaffed? At the program level, does your staffing correlate with construction activity demands? How do you track this? How do you manage this? If you're ramping up construction, do you have the needed resources to support a good control environment? As you're winding down construction, are you phasing out or redeploying resources to ensure that you're not overcharging the program? This is a great list of risks and controls, but the risks are dependent on your contract language and your program specifically. But this is a great table. I think that you can, Emily, you can get the PowerPoint at the end of this presentation. Is that correct?
Yep. You can download that from the slide deck and handouts widget, and that is to the right of the slide view.
Great. Thank you. So this is a great slide to take note of. All right. Moving on to our next polling question. Emily, do you want to do this one as well? Yep.
This is our second question. What is your capital program's or project's most significant risk? And your options are budget, schedule, scope or change orders, compliance, all of the above, or none of the above. And As I just mentioned, you are able to download today's presentation directly from the slide deck and handouts widget. Give everyone a couple more seconds here. And let's take a look at the results. Steve, back to you.
Great. So let's see. The budget is up there, which absolutely I'm sure you guys are having cost overruns and trying to figure out if it's change orders, if it's good procurement policy procedures and practices. Scope changes and change orders, that's another huge area of risk, and it's critical to understand if it's really your changes, is it owner-initiated, is it not owner-initiated. So we'll go over this later, but change orders are a high-risk area because you don't typically have the competitive bid procedures in place. So you don't have that control to confirm that you're not getting overcharged for these scope areas. Compliance, all of the above. Okay, so a lot of people are having all of these issues. So for those that have answered all of the above, you may need to talk to me or the people that answered none of the above, because they either don't have a program or they are on point. So great, thank you for that feedback. Moving on to the right to audit clause. Now that you have your projects in mind, I think this is a great place to start, and it's to ensure that you have the right to audit clause. The right audit clause is a great starting point to mitigate project and program risks. Knowing your costs and ensuring the cost is compliant with the contract terms is essential to prevent excessive charges. Timely and adequate review of project cost documentation can prevent overcharges and help manage total program and budgets. For those of you who already have existing contracts within the right to audit clause within your contracts, exercising your right before retention is paid, as long as your contract allows for that, which they typically do, is critical to achieving the savings. Once the payment has been made, it's harder to get it back. I find based off experience, and I'll repeat this one more time, if you have the right to audit clause, exercise it before final payment is made if your contract allows for that. Once the final payment is made, it's harder to get it back. Great. Moving on to construction contract controls, approaches for monitoring labor, equipment, and change orders. As discussed earlier, labor is a common area of risk. The most common labor and related burden contracting methodologies are actual cost or stipulated rates for salaried project management and hourly craft labor or field labor. From the audit standpoint, actual cost is preferred because you know the true cost of each employee and it does not include profit. However, we often see rates are more practical, but you need to make sure that they're market competitive. If there's no profit in labor, there's a higher likelihood based off experiences that the labor charges by the contractor will be more efficient, as this is not a profit center. That is, when we do our construction audits and labor is at actual cost, there's no markup on the labor, that the job is staffed less so than when there's rates. If the rates include a markup, there's a benefit for the contractor, so the job might not be efficiently staffed. If you allow stipulated rates, please ensure you clearly define what's included within the rates. If you don't clearly define it, things like PTO or all these other things could be charged to you. So whenever you have rates, make sure that you clearly define what's in them. Project management labor is typically salaried, and limiting hours worked to 40 can prevent overcharges to the owner. Labor burden rates should decrease for overtime and double time as FICA SUDA caps have been reached. So this is a great audit procedure for actual and making sure that your rates have this stipulation within it. Also, another area that is a good discussion item and making sure that you have this in your contract terms is on-site versus off-site labor definitions can help prevent excessive labor charges to you. This is not in the slide, but this is an area where owners can incur excessive charges as people may be booking time as they're off-site, driving, thinking about the job site at work, or just in the car jamming out. So making sure that you clearly define that they have to be on site to charge the job is critical. Rental equipment is another high-risk area, specifically contractor-owned rental equipment. However, third-party rentals can pose a risk if the rental charges are in excess of the actual cost of the equipment. That is, if it's a 3-year project and they need a specific equipment for the whole time, it might make more sense for you to buy it. Equipment needs should be well understood, and a cost-benefit analysis should be performed to ensure you're not paying someone else to purchase and keep the asset. Monthly rental rates should be stipulated to not exceed a percentage of the published rental rates or local prevailing rates. Cap total, if you look at your contracts, if you don't cap equipment rental payments, you should. We often find that maybe the rates are okay, but if you have a long project, that you're paying more than what it would have been if you would have just purchased the asset yourself. Minimum reporting standards is also good practice. Minimum reporting standards should include current usage, project usages, detailed equipment information such as model number, purchase price, purchase year, etc. And equipment charges should only be for equipment on site and with owner approval. And this is a great monthly check to make sure that the equipment are on site. It's for the equipment that is that they're not charging you excessive rates for the equipment that they're actually using, and that it's not excessive. If you have a bunch of equipment on the construction site and they're not using it, you need to make sure you're not paying for that. Rental charges should exclude maintenance. If maintenance is included, having contract terms around that is important. And another rental equipment, which is kind of not rental equipment, but can be, is computer and software charges should be directly related to your project. So we often come across overhead systems, which typically are included in the overhead and profit fee. However, they're charging these to the owners, which we would absolutely take exception to, unless the contract language specifies otherwise. All costs should be fully supported and caused by your project specifically. Moving on to change orders, the typical process includes a request for information, a change order request, change order. Supporting cost documentation is required to ensure you're not getting overcharged. This goes for both increases and decreases in the GMP total. We'll find often that people will get a decrease on their contract sum, and they say, great, and then we'll look at the supporting documentation for that credit, and it might be a lot more. So both increases and decreases need the sufficient cost support documentation to ensure that it's not excessive. Contract language can be added to set minimum reporting standards to prevent potential excessive contract values. Again, as discussed earlier, understanding the scope of the change is critical. Knowing whether this is the owner-initiated changed or other is critical. And if it's not owner-initiated, then further evaluation may be needed to ensure that they're not passing off costs that aren't yours. Change orders should be approved by the owner, the architect and engineer, and the general contractor, and be on the lookout for general condition charges. We, again, often come across areas where general condition charges are included within the change orders. However, the schedule didn't change. So whenever you have change orders, it's a high-risk area. Again, it's not competitively bid, so a lot of evaluation assessment needs to go into the change order review to make sure that you're not getting excessive charges. Guidelines for program and construction project controls, assessments and audits. So as stated in the slide, the construction audits can provide an objective and independent assessment of performance and can help owners achieve construction program goals. Construction contracts typically enable owners to perform construction audits. And this is what I stated earlier. If your contract, go to your contract, see if you have this right to audit clause. If you do, exercise it. If you don't, I'd start talking internally to see what you need to do to get that included within your contracts. So you have the right to audit clause. When should you and I'll make this one note, even if you don't have the right to the audit clause, there are still procedures that you can do to make sure that you're not getting overcharged. And we'll just go through the slide and answer the questions. They're good ones. So when should an audit, construction audit be performed? Project inception, during the performance, at the closeout. We'll piece this into two areas. So you have the program, which we find there's a lot of value added if you do a risk assessment on what you currently have in place at the program level before you start construction to identify risk early on. For a project specific, we typically will look very early on at what's getting charged, like maybe 10%, 5-10% to see what the documentation is being provided to the owner. We often get people scratching their head saying, why would you do it so early? But we've found very strange things, even at 5 or 10%, where maybe the job's only 5 or 10% complete, but they've charged 50% general conditions. So there's a lot of good, you can assess the control environment, the documentation that's being provided, and identify issues very early on to ensure that you're not overpaying. Another good time is 50% or so, where you can reassess there, and absolutely at the closeout. That is my favorite audit to do, and it's making sure if it's a GMP cost plus contract, for example, that you're tying out the cost, you're making sure that the fee markups are per the contract, and you're identifying any loose ends and making sure that you are not paying them for those. So it's critical to do a closeout audit if you have the right to audit clause on a GMP contract. What does an audit cover? Operations and project delivery, cost charges, cost schedule and scope controls, etc. So at the program level, I focused a lot on cost, but by doing these audits throughout the engagement and tying it back to the program, you can identify schedule issues and making sure that the reporting to the stakeholders is sufficient so that there's no surprises. What are the benefits of performing an audit? Control improvements, cost recovery, stakeholder visibility. So absolutely, when you have qualified either personnel or construction auditors, as they're going through what is, they're going to come to you with best practices in terms of what the recommendation is, which will help your organization get better. And the goal is performance improvement, not we gotcha. Cost recovery, which everyone loves that when you do a construction audit on a GMP contract, they typically result in cost recoveries, and everyone likes money back in their pocket. And stakeholder visibility. We find when you do the audits, you're coming up with best practice recommendations. The organization is following up on those recommendations. It's really well perceived. So it's a win-win. On to the next question.
All right.
Emily? Our
third polling question, do you perform program and or project audits and assessments? And your options are yes, no, infrequently, or not applicable. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. We are on our third question. Give everyone a few more moments to make a selection. And let's take a look at the results. Steve, back to you.
Thank you. Okay, so let's take a look at the results. I think the first slide, there was 60-some that had a capital program, and if we add the yes and infrequent, it looks like around there. If you have a capital program and or project and you don't do any audits, I think the slides here give you a good starting point. If not, if you have questions, jot them down. We're going to try getting to as many questions as we can. And again, if we can't get to them, I love to talk about these. I love to learn about your project, your issues that you're currently having, and kicking the tires with you. Okay. So for those that don't have a construction or are not performing assessments or audits, here are some focus areas. Cost of labor, materials, equipment, and other direct reimbursable costs, indirect project charges, pre-construction expenditures, etc. I'll let you sit on this for a minute or two and think about your project, where the risks lie, what can you do to validate it, what policy and procedures do you currently have to ensure that there's a good control environment, etc. And if all these are issues, then please call me after. I'd love to help you out. Okay, what can you expect if you get an assessment from an audit or anticipated program assessment and audit results? You can expect project economy, efficiency, and cost controls, prevention of problems, and early detection of risks. I love the risk assessment on programs because you can identify a lot of issues very upfront. You can make improvement recommendations on policy procedures where it's a little bit gray to making sure that what's being done is in line with senior management and stakeholders' needs, etc. Compliance with contract requirements and existing policy procedures, tighter internal controls and project controls, reductions in errors and overcharges, improved communication. I love this one specifically for government type entities. People like a lot of, and this actually goes for everyone, people like good information. What the project management reporting might be different than what senior management or end users would like to see. So tailoring those per best practices and ensuring that people are getting the information that they need to evaluate it. If they have questions, you can build in those types of things so that they understand where the program or project currently stands. With the audits, again, we focus on where areas you can improve. So having a culture of looking for where they can improve, where they can have tighter controls, where they can save more money is a great culture to be a part of. And protection of stakeholders' funds. If I gave the example earlier, which I think is a lot of people don't really look into this, but when you build these huge capital programs, you're purchasing these large assets. A lot of them have warranty conditions, and if something goes wrong with one of those assets and it's a year into the project operations and they go bad and you guys weren't compliant with the assets, that's not a good conversation to have. Again, the key is to ensure you're focused on your time on the most needed areas and select the most appropriate objectives, criteria, and scope and methodologies. Without these, the time spent to address the program risk may not result in the best value-add improvements in cost savings. Assessment and audit success stories. That's one of the fun things about this job is you typically have great successes and you see the spectrum of people that are looking just to continually improve or those that they're in over their head and they're looking for help. So they get the direct benefit from these audits and assessments. So here, we'll just go through some of these. Construction project control structure, saved $80 million. Improved project management cost reporting, $17 million recovery. So that's probably where they were overstaffing the program when the project was winding down and they redeployed the resources to other things to make sure that they're not getting overcharged. Identified $4.5 million of excessive change order charges, which we find great findings in change orders all the time, and or preventative of the change orders to make sure that you're not getting charged for maybe like errors or general conditions like we discussed earlier that are not your cost. Direct labor overcharges, reduced payroll taxes, improved operating standards and procurement processes. I love great procurement process and procedures. So I think that's, if you're starting up a program, getting an evaluation on your policy procedures is a great starting point, and then making sure people are actually doing it. Eliminating duplicate payments, improved compliance process. With compliance, I think that's a huge area where if you're not complying with like a government regulation, that can be very bad. So making sure that you understand what state and local regulations apply to your project and making sure you're proactive with complying with them can prevent you from ending up in the media, which no one wants to do. And program staffing costs, which I think we covered earlier. And then moving on to our fourth and final question.
All right, our last polling question. Have your audits and assessments resulted in significant cost savings and/or performance and control improvements? And your options are yes, no, undetermined, or not applicable. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the certification widget to the right of the slide view. And I also wanted to mention, if you are having any difficulty downloading these slides from today, we will be emailing them to all participants after the webcast. And I'll give everyone another second here. And let's see what everyone has to say. Steve, back to you.
Thanks, Emily. No, okay. Let's see if I got this. I got it. Okay, great. So here are the results. Yes, 31% you guys have done audits and assessments, and they've resulted in significant cost savings. So then you're aware that it's a very good feeling when you save a ton of money. It's great to present that to your bosses or stakeholders and saying, hey, look at the good work we did. No, some of you that did not, let's do no and undetermined. So for those, if you're doing these assessments and you don't really know where they're going or they're not resulting in significant savings or control improvements or performance improvements, then that's an issue. We find that the audits and assessments, if it's formalized, if you have good objectives for the high-risk areas, you have great criteria, which it's hard to argue against if you're using a very credible organization as your criteria for whatever the objective is, then everyone can agree that that's a good starting point. And then the audit methodology and scope, when you get the documentation and you're comparing it against the criteria, what's the difference, right? So having that well-documented, facilitating good, productive conversations, agreeing on the facts, and then coming up with a recommendation that's in line with best practices, as well as tailored to your specific entity, that's how you get the good program control improvement. So it's a total buy-in on the process, etc. For the construction audits. Same concept where the criteria is typically the contract language, or it is. So getting those savings and improvements is a great one. So thank you for that. Okay, and looking at the time, we are going low, so I'll go through this fairly quickly. So there's enough time for the Q&A. How do you leverage? What are the benefits? These provide best practices for construction program, master planning, and controls. Can provide best practice policies and procedures for successful programs, better stakeholder understanding of program, good practices and exposure areas. With our reports, or if you guys do the reports, a good way to facilitate productive conversations is typically there's a lot of good things going on, and then there's some areas that you can improve on or exposure areas. So making sure that it's not just a, hey, we got you, do better, but saying, hey, okay, here's the good that they're doing. They've maybe implemented some policy procedures, or they have a great reporting, or there's no deviations in procurement for policies and procedures, and then having the issues that they can improve on and facilitate a culture of continuous improvement is critical. That's a good slide. Okay, so with all this information, now that you guys are experts, what do you guys do? For new programs and projects, utilize advisory support, negotiate favorable pricing and contract controls. If you have a construction project in process, conduct a construction project risk assessment to determine which common construction risks are most relevant to your organization. And I also think a risk assessment is good at the beginning of a program startup, or wherever you are within the program, to figure out where your program is or what it's going to be, and then comparing that against best practices and getting those preliminary improvement or areas to focus on or improvement areas can prevent a lot of excessive charges, whether it's if you have a capital program and you're into the pre-construction phase and you haven't finalized the design documents, that can result in a lot of overcharges. So having an outside party or a very qualified person to evaluate the program as a whole and assessing against best practices can save you guys a lot of money. Assess staffing controls you have in place to address those construction risks. So this goes back to, do you have enough people? Do you have the right policy procedures? Is the documentation readily available? Are they reporting it in a manner that's updating end users so that they can actually use the information to timely resolve issues? So this isn't a numbers game. You need to make sure that you have the right mix of people and that they are supported by good policy procedures, etc. Conduct a detailed assessment of expenditures for contract compliance, reasonableness, and accuracy. This is for the construction audits on a specific project. These are fun when you're getting the information from the contractor and grouping it accordingly and evaluating against the contract terms. So those are always fun audits. And we went a little bit over time, but I think we got enough time for a couple questions.
Yep, we have some time left. If you have questions for Steve or Mark, you can submit them in our Q&A window beneath the slide view here, or if you would rather, you can reach out to them directly. So let's see what we've got. What size of construction project is a good candidate for an audit?
That is a great question. We find it obviously depends on the contract type. If it's, for example, if you have a very small project and it's like $1,000 and it's lump sum, I'm not sure what good an audit's going to do as long as the procurement process was in place. For a cost plus contract, GMP, we'll do audits on projects $2 or $3 million. We find the sweet spot for us is about the 10 to 15 million plus range. For program audits, I think it depends on your risk profile. If you have public stakeholders, it might be worth, even if you have a smaller program, to get an outside party to ensure that you're doing best practices. If you don't have those stakeholders, I think it's also a good practice to ensure that if you're doing best practices and reporting accordingly. So great question.
Thank you. What type of qualifications or experience do the consultants who perform these services typically have?
Great. So our team has, obviously, what I discussed earlier, team members are skilled professionals and have multiple of these under their belts with different construction contracts and project delivery methodologies. Some of the qualifications on our team include CPAs, CIAs, which is the Certified Internal Auditor. They're not working for the government. CCAs, which is the Certified Construction Auditor. CFEs, fraud examiners. PMPs, which are ensuring they're project management professionals. And then we even have some JDs for the gray area contracts. So those are typically the qualifications we'll see. Not saying that there are other qualifications that could be great. I could see that a PE being a great qualification for some of the more technical construction activities. Another good question.
Thank you. And we probably have time for one more here. What are the most typical areas of exception do you find?
Great. So I think we covered this earlier. The biggest areas we find cost savings are typically the labor and contractor-owned equipment. For labor, there's a lot of gray area depending on your contract type on what the compliant cost is. So if it's actual, what does that mean? So getting into the burden cost and seeing if it's actually your cost and there's not markups included, or labor that have rates, what's included, making sure there's not duplicate costs. Is it efficient? Is it in line with their original schedule, et cetera? So we find labor is a great area. Contractor and equipment. Again, this is equipment that's owned by the contractor, so typically it's internally generated invoices, etc. So this is an area where it's absolutely high risk, and the controls around this need to be in place. The reporting needs to be in place to make sure that you're not getting excessive charges.
All right, thank you. And it looks like we are right at the top of the hour, so I'm going to close us out. We did get a lot of questions we didn't have time to answer today. We will do our best to follow up with your questions after the webcast. And thank you, Steve, for a great presentation today.
Great. Thanks, everyone.
As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within the next 2 weeks should you have any difficulty downloading it now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.